Good morning, good morning, good morning. I'm hoping you can hear me. Let me turn Thunderstruck off. It's Friday, the 6th of December. Paul, can you hear me? I've had some troubles with Stripe recently. I'm hoping someone can hear me. Anyone hear me? Anyone? Where's Mr. Brown? There's Mr. Brown. Invite him. Invite to co-host Mr. Brown. Send invite. Invite sent. Mr. Brown, are you there? Good morning. Can you hear me?
I can indeed, yes. You sound a little bit muffled. Dare I ask where you are or where you ended up
Oh,
after your reunion
no, well,
yesterday?
it should be fine. Hang on one sec. I'm moving my speaker around a little bit. Is that better?
It is actually, yeah.
Oh, I don't. I've literally moved the microphone by an inch, but
Oh,
an inch is all it takes. That's all. That's what I've heard. Oh God.
certainly when you're five
Um,
foot two.
hey. Anyway, on to the legals. Nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Traders PIQ or PIQ Suite, or its affiliates, including the hosts, which, as you know, by now is Mr. Michael Brown and myself, Mr. Ryan Paisley. Are you in the office today, old bean?
I will be heading in a little bit later on, I think.
Oh, so a work from home day followed by a late day in.
Yes, exactly. Well, yesterday wasn't a work from home day. Actually, I was working from home, and then I went out for lunch, and then I went out for drinks with some clients, and then came back a little bit later than I was anticipating. So
Yeah, do you know
yes,
what? Not dissimilar from mine. I went to the Life Old Gits party last night. The old, so for those not aware, the old Life floor traders. And I ended up getting the last train home, and I was home at 1 o'clock in the morning, and that's not a train I
oh
want to do in future. For
oh
for
no.
once, I wasn't the most drunk person on the train. It was an absolute zoo on the train. But anyway, we digress. What has
I,
been happening, my friend?
well, I was going to say, I think the nub of that is that neither you nor I have any idea what's been going on in the markets over the last 24 hours or so. Because I
Well,
don't think either of
BTC
us
comment
really.
for me, to be honest.
Well, that's very true. That's very true. But I will try my best to give a summation of what's been going
If
on.
you
Good
wouldn't
morning,
mind, old
everybody, and
bean.
happy Friday, incidentally. It did appear to be a relatively quiet day yesterday, to be completely honest with you, which I'm quite pleased about. The S&P ended marginally softer, down by about 0.2% on the day, snapping that run of, I think it was three record highs in a row to start the trading week. We also saw some relatively modest gains across the Treasury curve, led by the long end, with 10 and 30-year yields falling by 3 or 4 basis points apiece, and that in turn putting a little bit of downward pressure on the dollar, with the greenback trading back below the 106 figure and losing ground against pretty much all G10 peers, actually. And we see that momentum continuing this morning, with cable trading north of 127.5, the euro just shy of 106, and dollar yen earlier on was trading below 150 until we had some commentary out of the BOJ earlier this morning. In terms of catalysts and data and news flow, again, it seemed like a relatively quiet day. We did, of course, have the weekly jobless claims data out of the United States. Initial claims, they rose by 224,000 in the weeks to the 30th of November. That is considerably above the consensus and the prior, which were both around 215,000. Although at the same time, we saw continuing claims coming considerably better than expected at 1.87 million compared to the 1.91 million that consensus had foreseen. Although, of course, note that neither of those prints pertain to the non-farm payrolls survey week, the November survey week, and of course, that November jobs report is due in about 5 hours' time at 1:30 this
Ooh.
afternoon. In terms of news flow, obviously OPEC or OPEC Plus meeting yesterday, they agreed to delay their 180,000 barrel per day output hike for another 3 months. This was very much in line with all of the sources stories that we had in advance of that meeting. And to be honest with you, crude was not particularly bothered by that at all, with WTI ending the day pretty much where we started, around $68.50 a barrel. We've also had some M&A news here in the UK. Aviva, of course, trying to buy Direct Line. It looks like Direct Line are going to accept that offer. Aviva bumping it up to an effective 261 pence per share yesterday. It's a cash and share offer. Direct Line have accepted that offer this morning and have rallied about 8% or so in reaction to that news. And that is pretty much it, to be completely honest with you, unless I've missed something absolutely glaring over the last
Well,
24 hours or so. That
you
is,
you know
go on.
what? Even Zach's thing this morning was quite light, so I'm guessing that there just wasn't much going on. But here's a fun fact for you though. I used to go out with the daughter of the guy that founded Direct Line. There you go. Means nothing to the world, but there you go. I just like to boast.
No,
Um,
it doesn't mean anything at all, to be completely honest with
back when I could nick a bird.
you.
Been a while.
Now you just have to
Anyway,
pay for them.
moving on quickly. So there's a few headlines from our dear friend Zach, who I hopefully am going to see this afternoon. Actually, investors investors have
Oh,
pumped.
you're in town, are you?
I am maybe. Investors have pumped. Stop it. Almost 140 billion into U.S. equity funds since last month's election, according to the EPFR, as traders bet on Donald Trump's administration will unleash sweeping tax cuts and reforms in a boon to corporate America. Some of Wall Street's top junk bond strategists say that 2025 is when the trend toward tighter spreads on high yield US corporate bonds begins to turn. That's according to Bloomberg. PBOC is expected to, that's People's Bank of China, is expected to deliver the biggest interest rate cuts in a decade next year, in the view of a number of Wall Street banks such as Goldman Sachs and Morgan Stanley. They're among those projecting cuts of 40 basis points to the triple R, which obviously, as we know, is their main, the big headline number of the multiple rates that they have. This would be the largest reduction in a calendar year since 2015. The ECB will cut rates more rapidly than previously envisaged to perk up the economy, facing weaker growth and inflation. A Bloomberg survey showed, with respondents predicting a quarter-point reduction next week and at every policy meeting through to June. I still believe that we're very, very likely to get a 50 at some point, but we'll see what happens there. A 50 basis point cut, that is. And
Well,
obviously,
just
go on.
I was going to say, just in terms of a bit of context around that, the market is pricing in, well, for next week at least, it's pricing in a 7% chance of a 50 basis point move. And yeah, just looking at the curve, it doesn't look like we've really got any 50 basis point cuts. Not a decent chance we're
Curve
priced in
moves,
at all at the
curves move.
moment.
They ain't door numbers. Um,
Well, no, I agree. It might
and
throw my
also,
Euro call into a bit of doubt, though.
well, exactly. And also, as we were saying yesterday, myself and Helen, is pretty well. Things have to get worse for the likes of France and Germany before they get better. So we'll see what happens there. But finally, from me, obviously, any chance to have a dunk on Germany, I will take it with both hands. German industrial production fell 1% month on month in October, from a minus 2.5% month on month in September. On the year, industrial production is down by almost 5%. This is a very weak start to the fourth quarter, increasing the risks of a winter recession in Germany. And that's your lot from me. Back to you in the
Nice one.
studio.
Thank you, mate. Well, of course, it is the first Friday of the month, and as is usually the case, that means that we do have our latest read on the US labour market coming up a little bit later on today. Before we get to that, though, we do have a little bit of Eurozone data out this morning at 10. We have the final read on third quarter GDP. That is expected to be unrevised at 0.4% on a quarter-on-quarter basis. Of course, the data is pretty stale at this stage, so I don't think markets are going to be particularly concerned about the number, certainly not when you consider the political tumult that is ongoing in the Eurozone. In any case, market attention will primarily focus on the jobs data today. Headline non-farm payrolls are expected to have risen by 220,000 in November, up from the dismal 12,000 increase that we saw in the month of October. As always, the forecast range for the non-farm payrolls number is relatively wide, between 150,000 on the low and 284,000 on
Tech
the high.
revisions.
Indeed, I was just going to come on to that, but before I do, the leading indicators for the jobs report are all relatively positive, to be honest with you. The ISM manufacturing survey, the employment sub-index there was at its highest level since June. The non-manufacturing or the services survey also remaining in expansionary territory, while the initial jobless claims, they fell by 27,000 between the two survey weeks and actually hit a cycle low in the November non-farm payrolls survey week. Of course, the revisions are going to be key as always, and actually I think the revisions this time around are likely to be pretty volatile given that the October report was skewed lower by the hurricane and strike related weakness that we saw in the
Yes.
labour market. Of course, that makes things even harder to measure than they normally are, but it's also likely to have the effect of boosting employment this time around to the tune of about 100,000 as those job losses are unwound in this month's report. In terms of other areas of the data, unemployment, that's seen holding steady at 4.1%. And it's important just to note that the what happened in terms of those one-off events in October, they shouldn't impact the unemployment rate. And that's because the household survey has a different classification for people who are unable to work due to weather or other one-off events. But having said that, the job losses we saw in October could skew the average hourly earnings data. Month on month, we're expecting that at 0.3%. On an annual basis, that's foreseen at 3.9%. Although, of course, the data previously, 0.4 and 4% respectively, that was skewed to the upside because those weather-related job losses disproportionately impacted those on lower incomes. So we could perhaps see a reversal of that trend this time around.
I genuinely think that today, more even more than usual, you could know the numbers before the announcement and you still do your absolute arse.
Oh, absolutely. I mean, I was just about to
It's
say that,
absolute
that is
market. Not only are the numbers a random number generator, but the market reaction is going to be random as fuck.
indeed. And I think, as we often say that, the market reaction to payrolls these days is choppy to be polite,
Yeah.
I think is the best way to phrase it. But of course, you've got to consider the time of year as well. We've just
Well, this is it.
come through Thanksgiving. Liquidity has been relatively thin and volumes relatively light all week. And a lot of market participants have pretty much checked out and gone home for the year. So it would not be at all surprising to see markets a bit of a mess, to be honest with you,
Exactly that.
around
Exactly.
lunchtime. The one thing I would say, though, just taking a step back, is that despite what is likely to be a relatively volatile market reaction to the jobs report, it is nonetheless seen as key in determining what the Fed are likely to do at their December decision. Of course, the Fed now focus primarily on the labour market side of the dual mandate, having gained sufficient confidence in inflation returning back to target. By way of framing expectations, the OAS curve in the States currently pricing about a 2/3 chance of a 25 basis point cut at the next meeting on the 18th of December. That has actually moved a little bit more dovishly over the last day or so. We were up at about 75% after we heard from the Fed's Waller earlier in the week. So obviously, if we were to get a strong labour market report, then you may see that market pricing pair to seeing the December meeting as a little bit more of a coin toss. Personally, I think the Fed are going to cut 25 basis points in 2.5 weeks' time anyway, no matter what the jobs report says. I was actually discussing this with Mr. Eisman, who I believe is on the call this morning, and we were talking about you'd need an incredibly hot jobs report in order to deter the Fed from delivering another cut next week. Speaking of the Fed, we do have some Fed speakers today. Bowman, Goolsbee, Hammack and Daly all set to speak after the jobs report is out. And of course, bear in mind as well that the Fed's pre-meeting blackout period, that comes into effect at close of play today.
Thank
Away
God.
from the labour market report in the States, we also get labour market data out of Canada today. Employment seen rising by 25 65,000 in November, while unemployment, that's seen rising to 6.6% for a prior 6.5%. The Bank of Canada, they meet for the final time this year next Wednesday, and the market is delicately poised in terms of expectations for that BOC meeting, pricing around a 45% chance of a 25 basis point cut and around a 55% chance of a larger 50 basis point cut. So for the Canadian dollar traders out there, one to bear in mind, although of course it will be overshadowed by the figures that we have out of the United States. We also have the latest consumer sentiment figures due from the University of Michigan. That's at 3, and the index expected at 73.3 for a prior 71.8, and also some attention will be paid to the inflation expectations components of that survey. And that is pretty much your lot for this morning and for this week.
Beautiful. Well, Mr. Brown, thank you as always. What a week. What a Christmas markets week. And obviously after this week, it's probably going to get even worse. Listeners, thank you as always. As usual, if you can't be good, be careful. If you can't be careful, buy a pram. And we will see you next week on Monday. I'll be live from Malta. There you go. How about that?
Oh, God. Blimey.
Don't say that. Right.
Well, the last time you were away, it was a car crash on here, so.
Oh, yeah. Well, yeah, I've got no defense, really, to be honest. We'll see how next week goes. Right. Speak to you later, guys. Take care.
Cheers. Bye-bye.
Have a great weekend. Bye-bye.